up, but here's SBI.
Go into further details on the numbers. I would just like to sort of quickly give you a few of the things which we feel are material and which we have done during this quarter. In respect of customer conveniences, we have been doing a large number of things. Some of them have been publicized, some not, but that's one of the reasons why I thought I should talk to you all today. One is we have started what we call quick banking. This is basically a missed call banking. So either you give a missed call or you send an SMS, and you can get a mini statement, you can get the balances, or you can do a card blocking. It's a set of 5 numbers, and already in a month's time, we are seeing traction to the extent of 1.3 to 1.6 lakhs transactions being done on this missed call banking. Similarly, we have now also put the entire passbook for the year. It can be available on your mobile if you have SBI Anywhere, which is the internet banking on mobile. So the entire year's passbook is available. We have also started what we call Swayam, which is a standalone passbook printer. Your passbooks need to be barcoded, so one visit to the branch to get that barcode. Subsequently, the printing of the passbook can be done anywhere from any of the ATMs. We have also started an initiative called a Tech Learning Center. We found that many of our customers needed hand-holding with the technologically powered offerings, and therefore at 385 RBOs, which are the regional business offices, on the 3rd Friday of every month, we have customer gatherings, and I would love the media to cover this so that more and more of our customers come to these sort of gatherings. And every 3rd Friday, as I said, of every month, we have 2 sessions, one starting from 4, one starting from 6, when we take them through all the new products and handhold them on the machines so that they can actually do transactions. So with that, we have already covered about 30,000 customers on this. In respect of ATMs, we know that the ATM uptime is something that we really need to press forward with. And this is a problem in the rural areas on account of lack of electricity. So we have now installed 800 solar-powered ATMs in the rural areas. Depending upon how these perform, we will be rolling out further numbers. Also, in order to be more handicap-friendly, we have now 8,000 talking ATMs to help those who have visual challenges, and we have created 600 ATMs with ramps, plus another 600 biometric ATMs. So we are trying more and more to come closer to the customer and make it possible for them to transact with us. In respect of our IT, again, we've had a number of successes. As you know, we have a huge network, and this network was on what was called mesh technology. That is, the branches would connect to a city aggregation point, which in turn would connect to the main data center. We have replaced this entire network with what is called multi-protocol label switching, that is MPLS technology, where the connectivity is directly from the branch to the data center. And this has been done with the help of our partners BSNL and Dimension Data. But the best thing is this 21,000 points rollout has been done in less than a year. We believe there is no other such implementation in the globe which has been done at this pace, and especially considering the far reaches of the country where we have reached. But this has been done very, very well. Similarly, the data analytics team that we have been talking about, it is now set up. We have recruited 16 people, of which 14 have already joined. So this data analytics is actually now beginning to yield results. The customer one view that we have been struggling with all these days, that has also now is available for us to enable us to know what is the customer's value and what more we can give to the customer. In the last few months, we have done over 17,000 merchant tie-ups, and the numbers of transactions on these tie-ups have been in excess of 43 crores, which has yielded us a revenue of over 242 crores. On the risk side as well, we have done a lot of revamp of products and processes. The early warning system that we have been talking about, the first models will be out by the 3rd week of March, and it is on schedule. We are also going to implement from the 1st of April a risk-based budgeting framework. That means the budgets that will be given, it will be done in a different manner altogether. It will not be merely top-line budgets, nor also only bottom-line budgets, but basically a risk-based budgeting framework. In respect of the social media, we have now 1 million followers, and I'm told that we are adding almost 50,000 daily. We have 56,000 followers on Twitter. On YouTube, we have more than 100 videos. Majority is on customer education. In respect of even the DBTL, which again is a very large kind of electronic transaction that is currently going on, of the 40 lakhs that happen on a daily basis on an average, our share is around 30%. So we are doing a number of things to ease the way customers do business with us. And of course, as we go through the presentation, we'll come with more details. We are also doing a number of things on the IT side, on the social media side, and also on the risk side, so as to ensure that going forward too, we are able to deliver better and better quality results. So with that, I'll request our CFO to take you through the numbers.
Yeah, thank you, ma'am. Yeah. Okay, next. So this is the usual safe harbor statement. Certain statements in this presentation are forward-looking and which are based on the management's current expectations and could change. This is the performance highlights of the bank for the third quarter. Net profit for the bank solo is up 30.24% at 2910 crore against 2234 crores in the third quarter last year. For the group, it is up 34.86% at 3828 crores. Operating profit solo is up 22%, and for the group, it's 21.61%. Non-interest income is up 24%. For the group, 18%. Expense ratio is 432 basis points down year-on-year for the bank, and 105 basis points for the group. So this 105 basis points is because the group has a lot of non-banking subsidiaries also. The gross NPA ratio is down 83 basis points for the bank solo and 59 for the group. The capital adequacy ratio as at 31st December stands at 10.01% Tier 1 and overall 12.66%. The net interest income year-on-year is up 10.60% at 38,546 crores. Interest expenses are up 11.39% at 24,770 crores. So with the result, net interest income is up 9.20% at 13,777 crores. The non-interest income, the fee income is up 10.75%. The overall non-interest income is up 24.27% at 5,238 crores. The operating income as a result is up at 19,000 crores, up 12.97%. Okay. So operating expenses overall are up 5.51%, and operating profit is up 22%, and net profit is up 30.24% at 2910 crores for the bank solo. This shows the movement in the net interest income, operating profit, and the net profit solo for the quarter 3 over the last 5 years. How during the quarter 3 the bank has performed. So at 13,777 crores, I think the net interest income has been the highest. Operating profit also has been the highest. Of course, the net profit was higher in the years 12-13, but of course sequentially it is already up in this year. This is how the NIM of the bank has moved. The domestic NIM has been stable around 3.5. There is a 1 basis points improvement during this quarter. The IBG, the foreign office's NIM is moved down by about 1 basis point. So for the bank as a whole, the NIM sequentially has moved up from 3.11 to 3.12. The yield on advances is stable at 10.57%. However, year-on-year, from 10.40 at December 13, it's at 10.57 in December 14. The cost of deposits has moved up by 7 basis points, and the cost of funds remains stable around 640. It's gone up to 643 now. The total deposits of the bank has grown by 11.86% year-on-year, of which the CASA growth has been 9.28%, domestic deposits total have grown 10.64%. Because the CASA growth is a little lower than the overall deposit growth, the CASA ratio has come down marginally from 43.89% to 42.58%. Gross advances have grown 6.91% to 12.65 lakh crores. The growth in the domestic advances was 7.74% and international book grew by 3.21%. The composition of the growth in the domestic advances, the large corporate book grew by 20%, mid corporate there has been a degrowth, marginal degrowth of 0.32%, SME again there was a degrowth. The home loan portfolio has shown good increase at 13.15%. Auto loan particularly have been good during the third quarter, so overall growth is 10.84%, and direct agri 6.53%. The capital adequacy ratio, the breakup as on 31st December. Tier 1 is 9.38% without accounting for the profits for the year. Tier 2 is 2.65, overall 12.03. With the retained profit, it works out to 10.01 and 12.66 overall. Okay. Next, the asset quality. The gross NPA ratio remains stable around 4.90%. As compared to December 13, there has been an improvement of 83 basis points. It's down from 5.73% to 4.90%. Then net NPAs again are down from 3.24% to 2.80%, though sequentially there has been a marginal worsening here from 2.73 to 2.80. The provision coverage ratio, which stood at 58.32% in December 13, is now at 63.56%. Sequentially, there has been an improvement of 38 basis points from 63.18% to 63.56%. These are the important ratios. The return on assets has improved by 3 basis points as compared to last year to 0.68 now. Return on equity is better by 63 basis points at 11.12% annualized. Cost to income ratio as compared to the whole of last year is down 142 basis points at 51.25. Earning per share has gone up from 15.68 rupees per share to 16.72 rupees. This is how we have been growing. In terms of number of branches, we have grown from 15,297 branches as on December 13 to 16,206 branches in December 14. The employee headcount has been lower from 2.23 lakh employees last year to 2.15 lakh employees now. So the new branches opened during the year were 909 and reduction in the head count is 8,335. This is the expanding footprint of the branch. The number of branches, as I already said, 909 we have grown. CAGR is 6%. Group ATMs have grown from 43,000 last year to 54,000 now. CAGR of 27% over the last 4 years. Internet banking users have grown from 165 lakhs to 209 lakhs, again a CAGR of 36% over the last 4 years. Mobile banking users now at 125 lakhs. Number of POS terminals, market share has been expanding from practically nothing, 1% in December 11 and 4% in December 12 to 15% now, with 181,000 terminals installed. Amount of POS transactions that we have been doing is 411 lakh of transactions happened, aggregating 10,469 crores during this year, 9 months. Debit card spend again has shown good increase. The market share of the State Bank now stands at 22% for the bank solo and another 3% for our associate banks. This is what we have been doing in terms of financial inclusion. Rural branches now stand at 6,186. Unbanked villages that have been covered by us stand at 80,000, which has shown a 87% CAGR over the last 4 years. Because of Jan Dhan coverage, we have been doing a lot more BC channel transactions now. So they have grown from 15,662 crore worth of transactions to 27,000 crores this year. Number of accounts that have been opened through the BC channel again have shown a almost doubled as compared to the last year. The RCETs are the rural training institutes where we trained 239,000 candidates during this year. and the financial literacy centers run by the bank undertook 25,776 activities during this year. Under the Pradhan Mantri Jan Dhan Yojana, we have opened 2.66 lakh crores with the deposit mobilization of 883 crores. This is the performance highlights of associate banks. Most of them have turned in much better performance in this 9 months as compared to the previous year. SBBJ is marginally up. SBH has grown from 573 crores to 872 crores. SBM 273 crores from 167 crores last year. State Bank of Patiala at 236 crores. SBT has a little bit of a setback in the Q2. In fact, they had reduced profits. All the associate banks put together have reported a profit of 2,020 crores against 1,696 last year. So with the result, the profit of SBI along with all the associates banks now stands at 9,360 crores against 7,850 last year. So this is a performance highlight of our non-banking subsidiaries. SBI Life has reported a profit of 615 crores against 541 crores last year. SBI Capital Markets 212 crores against 153 crores. SBI Funds Management at 116 crores, which is more or less the same as the last year. And SBI Cards and Payment Services, which issues the SBI cards, credit cards, at 252 crores against 232 crores. So the SBI Group as a whole, the total profit for the first 9 months stands at 12,300 crores after the minority interest against 10,210 crores last year. So there's some performance highlights of our non-banking subsidiaries. I will request Managing Director A&S to take you through that.
SBICAS has turned in a robust performance. In fact, the number of cards issued has gone up to 70,000 accounts in December itself, one of the highest in the last 8 years. They have actually, as I mentioned about 2 quarters ago, they have wiped off their accumulated losses and they are in the profit zone. And they rank number 3 in terms of cards in force. As you can see from the slide, the spends have gone up by 30%, receivables has gone up by 28%, and revenues have overall gone up by 28%. They have also had this online reward redemptions, which has been live for the last 4 months. Mobile servicing app has also been launched under Android. We are trying to get it from the other systems. SBI General Insurance is a general insurance firm which has come into operation 5 years ago. We are right now the 2nd position in fire and personal accident insurance in the industry. Overall, amongst 24 private players, they are right in the middle at the 12th. I hope to improve in the coming next financial year. Market share has gone up to 1.67 and 4% amongst the privates respectively. In the motor manufacturer tie-ups, we have got a tie-up with Hyundai and Toyota, and we also are planning to have a tie-up with Maruti, and that will ensure that we get more and more of this motor, private vehicle insurance. We also have the tie-ups with the RRBs and NBFCs, which has also ensured that the insurance premium start flowing in. The bank insurance and the health products have also been launched, and through the bank insurance channel, which will enable us to sell this health products across. We are also getting accolades across from different people. SBI Life Insurance overall has performance has improved. In fact, this particular year we have concentrated only on the retail and the new business rather than going on the group insurance business. And despite that, the growth has been quite healthy at 11% new business premium. Overall, there's a 33% growth in the renewal premium, which actually gives you a lot of the bottom line. 22% growth in the gross return premium. The market share has improved to 4.6% from 3.6%. The net profit is up by 14% to 615 crores. Persistency ratio is 71%, and there are efforts to go on to around 80% by the next year. The solvency ratio is comfortable at 2.27 as against the mandate of 1.5. Accumulated profits remains at 2,921 crores. SBI Funds Management has shifted its portfolio from being substantially in debt and liquid funds to equity, and therefore they have spent a lot in opening up centers outside the main 15 centers. According to their performance, 62% of the AUM is under in equity funds and 92% of the AUM in fixed income funds are in the top 2 quartiles, which shows excellent performance. They have been voted the best, most trusted brand in 2014, gold in the category of investment banking by Reader's Digest. Overall, they have launched 42 new funds, mostly in the debt, almost 60%, 75%, and they are also applied to SEBI for some more new funds, mostly in the equity and hybrid funds. They have opened 52 branches since in the last calendar year. Online investing and investor education has been going on. They have conducted 655 investor education meets till December 2014. And this online investing investments not only for the retail but also for the institutional investors. SBI Capital Markets has performance, as seen by the graph, has been growing year on year, and they continue to be the #1 leaders in the project finance area. They are the #1 global mandatory lead arrangers and financial advisor for project finance by Dealogic. Also been declared the #1 Asia ex-Japan mandatory lead arranger by Bloomberg. They have also received the Deal of the Year award for 2014 from M&A International. And they were also involved in the listing of the Tata Steel, in the arranging for the Tata Steel syndicated loans. Give it back to Praveen.
Balance sheet numbers. I think we can go to the next. Yeah, solo and then consolidated. This is a list of the awards and the recognition that the bank won during the third quarter. This is just for the list. Okay, thank you very much.
Now the floor is open for questions and answer sessions. Please identify yourself with the organization you represent and your name also.
Yes, we'll give you the numbers. Give the restructuring. The half year FY15, the restructured standard was 5,460. Half year 470. I'll tell you, for this quarter it is 4,092 standard.
And total restructuring is how much?
Total book today is 46,542. We started the year with 43,050. Okay. That is on 31st March or 1st of April, it was 43,050. Today it is 46,542. Standard restructured. And overall, we started with 58,938 and currently we are at 66,704. Slippages from the total restructured book is 4,396 for the 9-month period. For the 9th-month period. For this quarter. 1454 this quarter. 1454 this quarter.
Ma'am, I just wanted to understand.
Yeah, 1454 this quarter. Yeah.
Ma'am, here, Saloni from Bloomberg TV. Ma'am, just wanted to understand, last quarter you said that you don't have a magic wand. SBI results have stood out when it comes to asset quality. Would you like to share some tricks of trade with your peers?
There is no magic wand. We are doing a lot of hard work. Don't ever think that we are getting there without anything. But we have done a lot of follow-up, individual follow-up, and I think now that the media is here, I should tell you that we are going to have a mega auction on the 12th of March. I think 300 assets are being put on auction, of which, 14th of March, don't get the date wrong, 14th of March, and 300 pieces of assets, right? Of which amounting to around 1,200 crores will be auctioned, and of which 100 will be residential. So we are doing a lot of these things. It is a question of follow-up account by account, whether it be resolutions, OTSs, auctions. So all of this is being pursued along with whatever other legal redressal that we can get. So we've been doing everything, every single thing that is there on the book in order to get the NPAs to be resolved as quickly as possible. And as you know, we have a whole setup now which looks only at NPA resolution, the SAMG, and it has been strengthened considerably. I told you even in the beginning that the two areas where we have put people is in the SAMG piece and in the IT piece. So we have given them adequate resources, and I'm willing to give them more if they get better results for us. So we are doing everything possible in order to ensure that the book holds.
And the YOY number for the corporate book growth is about 20%, and both
Yes.
SME and mid-corporate have seen
That's right.
growth. Going forward, what is your outlook on all these three segments?
See, for the next 2 quarters, growth will remain a little muted. But you know, in respect of the SME, we have consolidated and changed our entire product suite. So all of the product suite we have brought in now is on risk mitigated products, and we are going to grow in SME in a very different manner. I had told you about the initiative that we were doing with BCG about the SME piece. So that rollout is now complete in 8 circles and will be complete in all 14 circles by March. And this rollout means that we are going to not only we have changed the processes, but the products. And therefore, while we have been consolidating on the SME piece, the growth in the SME you will actually find will come in after 2 more quarters. So I have absolutely no issues on the SME numbers, because frankly I thought that this was the right time, and so did my team think that this is the right time when we needed to consolidate. So this is a time when the requirements have also been low. So we have held back, we have not gone aggressively, but we have done whatever it takes, and you will see the growth coming back in about 2 quarters of time. In respect of the growth in other areas, and the same holds good for Agri as well. In Agri as well, we have a new offering, we have new products. Many of them are technology-backed products and risk-mitigated products. So there again, we will see much more growth coming in about 2 quarters' time. In respect of the corporate and the mid-corporate, we have to wait for projects to come in. And the corporate growth that you have seen is on the back of a certain amount of takeover finance, where we have refinanced completed projects. And of course, you know, for completion of stuck projects, there has been some growth. But real growth has to come only when projects come in. We are now seeing a trickle of new projects in the renewable energy space coming in. We have to wait for the other things. We are now being approached regarding pipeline projects, regarding various other projects, but then these things are yet to come to us actually. But again, I believe in another 2 to 3 quarters, we should be seeing growth in the credit book also coming in. Restructuring pipeline, the ballpark figure is 5,500 crores. It is a little on the high side, and I am giving that higher number, because you do not know what will happen during this quarter. Again, as you know, when you have a particular window closing, there is a little bit of a rush. So I am taking that into consideration. Our internal numbers are maybe slightly lower, but I think 5,500 crores is what we are looking at.
Ma'am, you can give us the overall slippage for the Q3, restructured and standard.
I'll tell you. Can you give the number?
Vis-a-vis comparable numbers.
Okay.
This time your slide didn't have anything on restructuring.
No, actually that slide, I don't know, they may have dropped it. What is the overall number?
You want the overall slippage?
The slippage for Q3?
Q3 slippage is 7,043 crores.
Actually, we have that slide, of course. 7,043, yeah.
Comparable?
Comparable last quarter, Q3 of FY14 was 11,438. And previous quarter, that is Q2 FY15, was 7,700.
And ma'am, could you tell us in this other income, you've given us how much is the fee income. Could you tell us what is the treasury gain?
Yeah. I'll give you the number. 900 something. Yeah, 920. 920 is the Q3 number as opposed to 238 in Q3 14, FY14. 920 is the Q3 number as opposed to 238 in the same quarter last year.
Treasury gains.
This is treasury gains. Profit and loss on sale of investments.
Q3 alone, no?
Q3 alone. The 9-month figure is 1,959 as opposed to 1,676 of 9 months last year. So we have a improvement of around 16.9% in a 9-month period. Yes, of course. I'll tell you.
That entire thing, write-off, recovery, upgradation.
I'll tell you. I'll give you all the numbers.
18.
Are you good?
18. Write-off is 5,096 crores for this quarter. Corresponding quarter last year was 5,077. And the
well, that was SBI. M&M also came out with numbers and the stock is up 5%. So let's just cut across to M&M Pressure as well.
Thank you, Pawan, and welcome to Q3 FY15 press meet. As usual, I'll talk about the environment, auto farm equipment review, Q3 financials, and a little bit on the subsidiaries. Overall, Pawan has touched on this. The sentiment are positive in the economy, right from inflation, oil price, the starting of the benign interest rates. Auto industry shows in parts good revival, 7% growth in cars, however, there is a 6% degrowth in UV. MHCV shows signs of revival while LCV continues to struggle. Tractor, as has been pointed out, has one of the quarters which we have not seen in the last 10 years. This is a chart which we kind of can update on various parameters how things have changed. If I can kind of talk about 2 or 3 which changed, IIP, our industrial production, has clearly been lower in this quarter than earlier. Similarly, the tractor industry growth is one thing which there is a substantial shift from the last quarter.
All right, that was the M&M management, but as you can see, we're having some technical trouble with the audio there, so we'll try and go back in just a bit. Meanwhile, we are going to go back and check to see whether State Bank of India is sharing any more details on its outlook, for the next few quarters. So here's ARUNDHATI Bhattacharya once again.
I think we have to wait for it a quarter or two. Also, you must understand that from the quarter after next, that is first quarter of next FY, anything we restructured will automatically go into the NPA book, right? So there will be no restructured standard. So we have to wait that also and see where it comes. But having said that, we are confident that we'll be able to hold the book. And going forward also, on account of the fact that we are getting more and more risk mitigated products into our books and much better monitoring systems, we hope that we'll show better numbers as we go ahead.
Thank you.
I'm very loath to say the pain is over.
Have you seen the worst already? Have you seen
that is what she's asking. Have I seen the worst already? I hope so. I hope so. But again, let's just wait it out for a quarter or two before we say that yes, it is surely the case. Slippages have come all across the board. It is not any particular area that it has come from, but obviously, the regular sectors, that is your iron and steel, trade and services, textiles, these have been the main areas. Some amount of power, that is infrastructure. $920, that's right. We have to, the allocation in G6 and equities has obviously gone up quite a bit. In fact, I was just looking at the numbers. We have around 36,000 crores more in the treasury area on an average than earlier years. So obviously the allocation to the treasury has increased because the pickup on the credit side is lower. Now hopefully as the credit side comes in and this allocation comes back to the credit side, there should be a yield pickup there. And we are hoping that it will happen sooner rather than later.
That was SBI. By the way,